Does price action even apply in volatility 75? Can we use the price patterns that we learned when we're trading forex and everything? Should we just apply the same method? So those are the questions that are going to be answered in this video. So I believe it is going to help you, it is going to change you. Please like, subscribe, and share this video if you are interested. So let us just get started without wasting time. So remember what I always tell you guys, that this market, it is a synthetic index market, the synthetic index market. So it was created to mimic the real market. It was created to mimic the real market, meaning here there is no psychology involved, because there are no people or real players behind it. So there is no psychology involved, but we should hold on in the fact that it was created to mimic the real market, meaning its behavior, it was programmed in such a way that it will behave like the real market, that we as traders apply patterns and price action at large. But then there is a slight difference. For an example, we can just observe this market here. You can see the structural move of this market. Let me quickly just open the currency market just to show you the difference, just to establish the difference between these two markets, so that this lesson can flow easily. So okay, now here is just the first observable thing. Look between these two markets. You can see this market that it is very, very clean. There is no or too much activity taking place. Look at this one. You see how it behaves. There are a lot of candles, a lot of clustered candles, but in this one, it's like every candle is in the right place and it has a purpose. But here there are a lot of candles which are just clustered, and for no reason. Why? Because here in the market, in the forex market, in Aussie CAD, there is real battle between buyers and sellers in the economy of Aussie and the CAD. So there is a real battle in the economy. But here you see that there is no real aggressiveness, there is no real activity. The market is just clean. However, that cleanliness of the market, it can be also a disadvantage. Why? Because look at how the way that the waves shift from one wave to another. Here, the corrective shifting into an impulsive. Again here, the shift, it is in V shapes. It is in V shapes. Yet in this side, look at the shift. It is in C shape. It is in C shape. You can see how the market shifts. It shifts in a manner of a transition. It shifts in a manner of a transition. But here it is just V shapes, V shapes, V shapes. It is not, and transition doesn't happen frequently. But although we can see some part of it just like that. So it's a disadvantage to you as a price action trader. Why? Because you are used of entering a corrective wave through patterns like wait, where is this thing? Through patterns like flag patterns, that when this pattern is broken, I enter. Through patterns like triangle pattern and so on, all those price action patterns, you are used in entering with those patterns. But here you will find a corrective not showing waves like this, but it will just be a corrective moving straight and an impulsive again. So where is the pattern here? There is no pattern. It is just a straight line. So that's where we need to shift our perspective. In other words, when you approach any market, for an example, even in the currency market, the way you are trading the currency pairs, there should also be a different approach when you are trading pairs like cryptocurrency or indices or gold or whatever. So there should be a variation, meaning your price action analysis should not depend on something that is fixed, what you just learned in a book, but it should depend on the behavior of the market in that particular time that you are trading in. The behavior of the market in that particular time, how the market behaves. For an example, when you come to this synthetic index market, that's where you need to establish a strategy of entering such scenarios, these V shapes that happens in the shift of the wave. You should have a method of entering in such markets. That's why I introduced this thing of a flow break. You should look at the flow. When this flow, for an example, when this downward flow, this series of red candles is broken, that's where we enter. Now we are no longer waiting for a break of a series of waves like this, but we are waiting for the break of this flow, just this, the straight flow that you see here. We are waiting for a break of it, and then we are entering the market. You see, we are entering the market. And another issue, it is the issue of support and resistance, supply and demand. Does it work or whatever? It does work, but then the difference is that usually in the Forex market, there is some kind of precision or accuracy. For an example, you will see just a range, although it will be having some bit of challenges in the currency market, but there is just some accuracy. But when you come in this market, you'll find a range doing something like this, doing something like this, doing something like this. It's just a funny market where there is some kind of precision. So that also should be in your mind. That also should be in your mind on approaching those support and resistance level, because you have to understand. For an example, here you see that here there is no trackable pattern, although we can see that it's a kind of an upward channel, but we don't know when this wave begin, where is it going to end. It might end in the middle and go down and come back again. So there's just that kind of a struggle. So you should establish a method that will help you through that kind of a market. You should establish a method that will help you through that kind of a market. And remember, I remember early in the days of this kind of markets, early in the synthetic index market. Remember, those who have been following us for long, there was a time when we were trading only trends in this market. We were trading only trends because it was way more easier than it is to trade ranges, because ranges, they are not well clear. For an example, you can see even here, in this kind of an area, there is no clarity on where to enter. Is it now on support or is it now on resistance? So we used to trend some kind of market like this, where the market has now established some form of clear direction. So guys, it is nothing complicated. It is just you doing what works best for you. It is you approaching the market with a method that is going to help you. There is nothing, for an example, if you have knowledge of trading the currency market, you then don't need another bulky course of trading synthetic indices. No, you have the basic knowledge of the market. Then come with that knowledge here and then change that knowledge according to the structure of the market. You see, it's not something that requires mentorship. It's just you sitting and observing the price, observing how the price moves, how the price behaves. It is you sitting down with the charts. So then you are going to say that, okay, my trend trading strategy can be manipulated in this way so that you will suit my analysis in volatility indices. So I will keep it short, guys. Those are the tips that I wanted to give you. Just focus on how the market behaves and flow with the market. So thank you for watching this video. Like and share and subscribe if you are not a subscriber. Thank you.